In this podcast episode, Michael Saylor, the co-founder and executive chairman of MicroStrategy, shares his insights on the future of Bitcoin, the potential establishment of a U.S. Bitcoin reserve, and the broader implications for wealth and investment strategies. The conversation delves into various subjects, each revealing the transformative potential of Bitcoin in the global economy. Michael Saylor begins by addressing the evolving perception of Bitcoin, particularly in light of its recent surge past the $100,000 mark. He asserts that the question of whether Bitcoin is real has been settled. It is now recognized as a legitimate asset class. Saylor emphasizes that Bitcoin's acceptance as an institutional asset is crucial for its future growth. He believes that as more high-net-worth individuals and institutional investors embrace Bitcoin, its value will continue to rise, potentially reaching his forecast of $13 million per coin. Saylor argues that education is the key driver behind Bitcoin's adoption. He points out that a significant portion of the global population, around 95%, still lacks a comprehensive understanding of Bitcoin. This gap in knowledge presents a tremendous opportunity for growth. As more people become educated about Bitcoin and its benefits, the demand for it will increase, driving its price higher. Saylor's long-term forecast is based on a macroeconomic model that predicts Bitcoin will grow at an average annual rate of 29% over the next 21 years. Central to Saylor's predictions is the Bitcoin 24 model, an open-source macroeconomic framework that analyzes Bitcoin adoption and its potential impact on the economy. This model allows users to input their assumptions and explore various scenarios regarding Bitcoin's future. Saylor explains that the model is based on historical data and trends, projecting a growth rate that will eventually decelerate to 20% per year. This deceleration is expected as Bitcoin matures and becomes more widely accepted. The Bitcoin 24 model serves as a roadmap for understanding how Bitcoin can transition from a speculative asset to a mainstream investment. Saylor believes that as institutional investors, such as BlackRock, begin to allocate a portion of their portfolios to Bitcoin, it will further legitimize the asset. This institutional interest is crucial for driving Bitcoin's price upward and solidifying its status as a store of value. Saylor highlights the increasing interest from institutional investors in Bitcoin, particularly through companies like MicroStrategy. He notes that many institutional investors are now trading options on MicroStrategy's stock, which is heavily tied to Bitcoin. This connection creates a feedback loop where the success of MicroStrategy's stock drives demand for Bitcoin, further increasing its value. Moreover, Saylor points out that several companies are adopting a Bitcoin standard, meaning they are using Bitcoin to recapitalize their balance sheets. This trend is not limited to MicroStrategy. Other companies, such as Riot Blockchain and Marathon Digital Holdings, are also following suit. As more companies recognize the benefits of holding Bitcoin as a reserve asset, the overall demand for Bitcoin will increase, contributing to its price appreciation. Education plays a pivotal role in Bitcoin's adoption, according to Saylor. He believes that as more people understand the fundamentals of Bitcoin and its advantages over traditional assets, they will be more likely to invest in it. Saylor emphasizes that Bitcoin is not just a speculative investment. It is a revolutionary technology that has the potential to change the way we think about money and wealth. Saylor's commitment to education is evident in his efforts to share knowledge about Bitcoin through various platforms. He encourages individuals to explore the Bitcoin 24 model and engage with the broader Bitcoin community. By fostering a deeper understanding of Bitcoin, Saylor believes that more people will recognize its value and potential, leading to increased adoption and investment. The conversation shifts to the role of governments in the future of Bitcoin. Saylor argues that governments should embrace Bitcoin as a strategic asset rather than resist it. He suggests that the United States should consider establishing a Bitcoin reserve similar to its gold reserves. By doing so, the U.S. could position itself as a leader in the global Bitcoin economy, attracting investment and fostering innovation. Saylor acknowledges that some governments may be hesitant to adopt Bitcoin due to concerns about regulation and control. However, he believes that the benefits of embracing Bitcoin far outweigh the risks. By creating a regulatory framework that supports Bitcoin, governments can encourage investment and innovation while also protecting consumers. Saylor envisions a future where Bitcoin is integrated into the financial system, providing a stable and secure means of storing wealth. As the conversation progresses, Saylor discusses the implications of Bitcoin for wealth creation and preservation. He argues that traditional assets, such as real estate and stocks, are subject to inflation and market volatility. In contrast, Bitcoin offers a unique opportunity to preserve wealth over the long term. Saylor believes that as more individuals recognize the advantages of Bitcoin, they will begin to allocate a portion of their wealth to it. Saylor emphasizes that Bitcoin is not just a speculative investment, it is a long-term store of value. He encourages individuals to think of Bitcoin as a form of digital capital that can provide financial security for future generations. By investing in Bitcoin, individuals can protect their wealth from the erosive effects of inflation and economic instability. Saylor addresses the issue of inflation and its impact on traditional currencies. He explains that the supply of dollars has been expanding at an alarming rate, leading to a decrease in purchasing power. This inflationary environment creates a sense of urgency for individuals to seek alternative assets that can preserve their wealth. Saylor argues that Bitcoin is uniquely positioned to serve as a hedge against inflation, offering a scarce and deflationary asset that can retain value over time. He draws parallels between Bitcoin and other traditional assets, such as real estate and gold. While these assets have historically been viewed as safe havens, Saylor believes that Bitcoin offers a superior alternative. Its digital nature allows for greater liquidity and accessibility, making it an attractive option for investors seeking to protect their wealth from inflationary pressures. The discussion also touches on the intersection of artificial intelligence, AI, and Bitcoin. Saylor believes that AI will play a significant role in the future of Bitcoin and the broader financial landscape. As AI technology continues to advance, it will enable more efficient trading and investment strategies, further driving demand for Bitcoin. Saylor envisions a future where AI systems leverage Bitcoin as a form of digital capital, facilitating transactions and investments at unprecedented speeds. This integration of AI and Bitcoin has the potential to revolutionize the financial industry, creating new opportunities for wealth creation and investment. Saylor emphasizes that the synergy between AI and Bitcoin will be a key driver of economic growth in the coming years. Saylor discusses the potential for global adoption of Bitcoin, particularly in regions facing economic instability. He notes that individuals in countries with hyperinflation or restrictive capital controls are increasingly turning to Bitcoin as a means of preserving their wealth. This trend is particularly evident in countries like Venezuela and Argentina, where traditional currencies have lost significant value. As more individuals in these regions adopt Bitcoin, Saylor believes that it will create a ripple effect, encouraging others to follow suit. He argues that Bitcoin's decentralized nature makes it an attractive option for those seeking financial freedom and security. Saylor envisions a future where Bitcoin becomes a global standard for wealth preservation, transcending borders and economic systems. The conversation shifts to the future of the US dollar in the context of Bitcoin's rise. Saylor argues that the dollar's status as the world's reserve currency is at risk if the US fails to adapt to the changing financial landscape. He believes that the US should embrace Bitcoin as a means of reinforcing the dollar's position in the global economy. Saylor suggests that the US could benefit from creating a digital dollar backed by Bitcoin, allowing for seamless transactions and greater accessibility. By integrating Bitcoin into the financial system, the US could enhance the dollar's appeal and ensure its continued dominance in the global market. Saylor emphasizes that the future of the dollar depends on its ability to adapt to new technologies and economic realities. Saylor advocates for the establishment of a digital assets framework in the U.S. to support the growth of Bitcoin and other cryptocurrencies. He believes that a clear regulatory environment will encourage innovation and investment in the digital assets space. By providing guidelines for companies and investors, the U.S. can position itself as a leader in the global cryptocurrency market. A digital assets framework would also help to protect consumers and ensure the integrity of the financial system. Saylor argues that by embracing Bitcoin and other digital assets, the U.S. can foster a more inclusive and efficient economy. He envisions a future where digital assets play a central role in the financial landscape, driving economic growth and prosperity. The discussion concludes with a focus on the potential establishment of a U.S. Bitcoin reserve. Saylor believes that the U.S. should consider creating a strategic reserve of Bitcoin to enhance its economic position. By accumulating Bitcoin as a reserve asset, the U.S. could strengthen its financial stability and protect against economic downturns. Saylor argues that a U.S. Bitcoin reserve would send a powerful message to the world about the country's commitment to innovation and economic leadership. It would also provide a hedge against inflation and currency devaluation, ensuring that the U.S. remains competitive in the global market. Saylor's vision for a U.S. Bitcoin reserve reflects his belief in the transformative potential of Bitcoin as a cornerstone of the future economy.